Trading is brutal, but not for the reasons most beginners believe. The majority walk into this arena convinced that success is merely a matter of discovering the perfect setup, mastering a handful of candlestick patterns, or stacking the most sophisticated indicators on their charts. They spend months, sometimes years, hunting for the holy grail strategy that will finally make the profits flow effortlessly. Yet the uncomfortable truth, the one that separates the perpetually broke from the quietly profitable, is almost entirely psychological. You can possess the cleanest price-action reads, the most mathematically sound risk-reward ratios, and the sharpest institutional-level analysis, and still bleed your account to zero if your mind remains untrained, fragile, and reactive. Before we continue, make this commitment. This channel isn't about quick fixes, it's about developing traders with mental strength and discipline. If that resonates with you, join us. Subscribe now so you don't miss any of our upcoming videos. Stay until the end and keep progressing with us, one mindset shift at a time. This video isn't just another trading video, it's a mirror for your mindset. Like now, comment what resonates, and stay until the end. Because one idea here could change how you think, and how you trade. Let's go. The first unmistakable signal that you are crossing the invisible threshold from habitual loser to future consistent winner is so subtle that no one watching your screen would ever notice it. To an outside observer, you still look the same, charts open, platform running, coffee getting cold. But inside, something fundamental has shifted. The compulsive urge to force a trade on every single wiggle of price has quietly evaporated. You no longer feel the market as a predator that must be attacked immediately or it will escape forever. The frantic, almost physical itch to click, buy, or sell the moment a candle closes has been replaced by an unfamiliar, almost alien sensation, comfortable stillness. In the beginning, trading feels like standing on a train platform while money trains roar past every 30 seconds. Each departure without you aboard triggers panic. That was my train. I'll never see another one. You jump onto mediocre setups, half-formed ideas, and outright garbage simply because the alternative, not being in the market, feels like slow financial suicide. Your heart races, your palms sweat, your mouse cursor hovers like a junkie's trembling finger over the needle. Every minute out of a trade is experienced as lost income, lost opportunity, lost proof that you belong here. Then, almost without announcement, the day arrives when you open your charts and realize the hysteria has drained away. The same squiggly lines that used to scream, "Do something," now merely whisper possibilities. You can watch an obvious setup form, meet every single one of your old criteria, and still feel zero compulsion to pull the trigger if one tiny detail is off. You are no longer afraid of missing out because, at a visceral level, you finally understand that the market is an endless river of setups. Missing one is irrelevant, forcing a suboptimal one is suicide. Quality has quietly, decisively overthrown quantity as the governing principle of your trading life. This is not a dramatic epiphany accompanied by trumpets. It is more like waking up one morning and discovering you no longer smoke. The addiction is simply gone. You still recognize the temptation, but it has lost its emotional teeth. Patience, once a virtue you tried to fake through clenched teeth, has become your default operating system. Your pulse stays low, your breathing even, your decisions unhurried. Emotion and action have begun to separate like oil and water. This shift never happens overnight. It creeps in slowly, the way high tide retreats and suddenly reveals sand patterns you never knew existed. At first your old self fights back, "Come on, just one quick scalp, it's printing money." But each time you resist, another layer of mental scar tissue forms in the right direction. The more you wait for genuine edge, the clearer the market becomes. The fog of desperation lifts, and you begin to see price action for what it truly is, a continuous stream of probability, not a series of life or death emergencies. What makes this transformation so powerful is not merely the money you stop hemorrhaging on terrible trades. It is the mental real estate you reclaim. When you cease forcing entries, you step off the emotional roller coaster that destroys 95% of retail traders. No more euphoric highs followed by gut-punching lows. No more staring at a losing position at 3 a.m. wondering how you're going to explain this one to your spouse. Every trade you now take is deliberate, intentional, and aligned with a predefined edge. Losses, when they come, and they still come, are simply the tollbooth fee on the highway to profitability. You pay it without rage, without self-loathing, without the compulsion to get it back right now. And that brings us to the second sign, the one that cements the first and propels you forward. You begin to respect small losses exactly the way a disciplined entrepreneur respects overhead. Early in your career, a $37 loss feels like a personal assault. A red candle that stops you out is proof that you're stupid, unworthy, a fraud who never belonged in this game. The stomach knot tightens. Adrenaline surges, and the overwhelming urge to revenge trade kicks in like a reflex. You double your size, just this once, to erase the sting, and 2 hours later you're staring at a hole 10 times larger, wondering how it happened again. Then, almost imperceptibly, your relationship to loss changes. You execute a trade, price hits your predetermined stop, and nothing. No explosion of emotion. No internal monologue about your inadequacy. You simply close the platform window, log the trade, and move on with your day. The loss registered financially, but it did not register emotionally. You have internalized, truly internalized, that risk is the cost of doing business, no different from a restaurant owner paying rent or electricity. Some months the power bill is higher, some months lower, but you don't take it as proof that you're a terrible chef. This psychological decoupling is rocket fuel. When small losses stop generating fear, fear stops generating larger losses. You no longer move stops, just this once, hold losers hoping for a miracle, or risk 5% to make back 1%. You treat every basis point of risk with the casual respect a professional treats any other expense, necessary, planned for, and emotionally neutral. The result is a dramatic increase in both survival probability and peace of mind. These first two signs, ceasing to force trades and learning to shrug at small losses, are deeply intertwined. One cannot fully exist without the other. When you stop forcing entries, you naturally take fewer trades, which means fewer losses to trigger old emotional wounds. When you stop personalizing losses, you remove the terror that previously drove you to force entries in the first place. Together they form a positive feedback loop of growing calmness, clarity, and capital preservation. At this point something else begins to happen, something even more subtle yet infinitely more powerful. You start thinking in processes rather than outcomes. A single winning trade no longer inflates you into a genius who's finally figured it out. A single losing trade no longer crushes you into a hopeless failure who should quit. Results become data, not identity. You execute your plan, respect your stops, trust your edge, and let the law of large numbers do its quiet, inexorable work. The market will win some, you will win some, but your equity curve begins its slow, stately march upward because variance is finally working on a foundation of discipline instead of chaos. There will still be days when the old demons whisper. A string of losses tempts you to abandon your rules, just until I get back to even. A parabolic move you missed screams that you're too slow, too cautious, too scared. But these voices no longer control the steering wheel. They are passengers you acknowledge, then ignore. You pause, breathe, return to your checklist, and act only when every criterion aligns. You have learned to respond instead of react, to observe instead of obey impulse. By the time these first two signs are fully rooted, your trading rhythm has undergone a profound metamorphosis. Confidence is no longer a fragile flower that blooms only after a winning streak and wilts after a drawdown. It is bedrock, built on repeated demonstrations to yourself. That sitting on your hands is often the highest probability play. You understand at a cellular level that the market's primary function is to distribute capital from the impatient to the patient, from the emotional to the disciplined, from the crowd to the remnant who learn to wait. And it is precisely this patience, earned, not faked, that opens the door to the deeper signs of emerging profitability. The third sign is the gradual, then sudden ability to detach completely from the outcome of any individual trade. Most traders live and die by the PNL of the moment. A green trade ignites euphoria and overconfidence, a red trade triggers guilt, shame, and the overwhelming need to do something to fix it. This emotional enslavement guarantees inconsistency because every decision is filtered through the distorted lens of how you feel right now. When detachment finally arrives, it feels like stepping out of a suffocating carnival and into cool night air. You still care about results, of course you do, but you no longer conflate the outcome of one trade with your worth, intelligence, or future prospects. You execute according to plan, accept whatever the market gives or takes, and immediately shift focus to the next high-probability setup. The market ceases to be a personal opponent and becomes a vast probabilistic playing field where your only job is to keep placing intelligent bets with positive expectancy. This detachment is not apathy. It is the calm clarity of a surgeon mid-operation, intensely focused, emotionally neutral. Trusting the process because the process has been tested 1,000 times before. You no longer need the market to validate you, because your validation now comes from fidelity to your rules. Flowing naturally from detachment is the fourth sign, the rock-solid trust in your personal edge. Early on, every setup feels like guesswork. You second-guess entries, move stops, take profits early. Abandon plans the moment price breathes against you. Profitable traders, however, have done the thousands of hours of screen time, backtesting, forward testing, and honest journaling required to know, truly know, under exactly what conditions their methodology prints money and under what conditions it struggles. Trusting your edge does not mean believing you have a crystal ball. It means having such intimate familiarity with your strategy's DNA that hesitation evaporates when your exact criteria appear. You no longer need the trade to feel right, you need it to match the blueprint you have proven works. This trust is the difference between the trader who freezes when price finally reaches the perfect level and the trader who executes instantly, mechanically, and without the slightest tremor of doubt. When detachment from outcome and trust in edge operate in tandem, magic starts to happen. You take the trade calmly, manage it according to plan, and release attachment to whether it wins or loses because you know that 10, 50, 200 repetitions of this exact process will inevitably produce the equity curve you designed. Small wins stack quietly. Losses remain small and predefined. The emotional roller coaster levels out into a smooth, ascending line. Preparation now becomes almost obsessive, and joyfully so. The night before the session you review key levels, news, catalysts, correlated markets, volume profiles, order flow footprints. You walk into the trading day already knowing where your A-plus setups are likely to appear, and exactly how you will respond. When price arrives at your predetermined zone, execution is automatic. When it does not, you experience zero regret. Zero FOMO, zero second guessing. You have pre-committed to inaction unless perfection presents itself. Mistakes, when they inevitably occur, are no longer shame triggers. They are data. A rule violation is met with curiosity, rather than self-flagellation. Interesting. Under what emotional state did I abandon my plan? How can I engineer my environment so that doesn't happen again? Every error becomes raw material for refinement rather than proof of unworthiness. Self-awareness sharpens to near clairvoyance. You notice the exact moment boredom begins to nudge you toward overtrading. You feel the subtle dopamine hit when a winning streak tempts you to increase size prematurely. You catch fear just as it tries to move your stop. Instead of being ambushed by these impulses, you observe them like a scientist watching lab rats, and gently steer yourself back to protocol. By the time these middle signs have fully matured, trading no longer feels like warfare. It feels like gardening. You prepare the soil, pre-market analysis, plant at the right season, only A+. Setups, water and weed according to schedule, risk management and trade management rules, and trust that harvest comes to those who refuse to dig up the seeds every day to see if they're growing yet. And then, almost without fanfare, the final sign arrives. It is the quiet, unshakable certainty that your process, when executed with fidelity, cannot fail to produce long-term profitability. This is not arrogance. It is the earned conviction of someone who has watched the same patterns play out hundreds of times and understands, deep in their bones, that positive expectancy plus disciplined execution plus sufficient sample size equals wealth. You no longer need reassurance before entering a trade. You no longer scan Twitter for validation. You no longer pray for winners. You simply execute, manage, and repeat, serene in the knowledge that the math is on your side. Losses are no longer speed bumps, they are the entry fee you gladly pay for the privilege of being in the game. Fear and greed still exist as background noise, but they have about as much influence over your trigger finger as elevator music. Risk is now a precision instrument rather than a wild animal. Position sizing is calculated to the penny. Stops are placed where they invalidate the thesis, never where they protect your ego. Drawdowns are accepted with the same equanimity as a farmer accepts rainless weeks, uncomfortable, but part of the cycle. Time horizon has expanded from minutes to years. You measure progress not by today's P&L but by the slope of your equity curve over rolling 6-month periods. The need for instant gratification has been replaced by the deep satisfaction of watching small, intelligent decisions compound into life-changing capital. Learning never stops, but it is no longer desperate. Every trade is dissected not to prove you're smart or stupid, but to extract one more micron of edge. You have become a permanent student of both markets and self, perpetually curious, perpetually refining. When this final sign is fully embodied, something remarkable happens. Consistency is no longer something you chase. It is simply who you are. Your account grows with the quiet inevitability of a tree adding rings. You are no longer reacting to the market, you are dancing with it, fluid, calm, precise. External chaos may rage, flash crashes, geopolitical shocks, earning surprises, but inside your mind there is only the Steady rhythm of plan, execute, review, repeat. You have mastered the only thing that ever truly needed mastering, yourself. The profits, the freedom, the quiet confidence, these are merely the byproducts of a mind finally aligned with reality. The market remains unpredictable, brutal, and indifferent. But you are no longer its victim. You have become its calm, disciplined, highly probable beneficiary. And when you look back at the desperate, overtrading, emotional wreck you once were, you will barely recognize that person. Every tear, every blown account, every sleepless night was tuition paid. For this final state, the quiet, unshakable knowledge that as long as you continue to show up and execute your process without deviation, consistent profitability is not just possible. It is inevitable.